Hello traders, welcome back to my channel. This is weekly forex forecast for the upcoming week, and we are reviewing the gold. Gold is a very interesting pair, and it is actually good to trade anytime, any day. And if you are spot on your analysis, you are sure going to make a very big profit from gold. If you master how to trade gold, you won't even want to leave gold to trade other pairs, because gold moves a lot and is sure to give you the kind of profits that you desire. But just one thing you need to know is to understand how to trade gold. As you can see on what I have here on the chart, gold has been on an uptrend. It's been moving up for a number of weeks now, and we are expecting the continuation of our trade. So, but what I see temporarily for this time out is a sell. A sell has matured in gold. So if you have been trading uptrend up to this point, I want you to consider seriously about making some intelligent sell. If you look here on the chart, you will discover that what we are having now is a triple top. Look at it here. A top here has formed. This is another top, and this is another top. So this is a triple top, and whenever we see this structure of a triple top, what wants our mind is sell. We'll be itching to press our sell button, but we have to do that as intelligent as possible. So what I'm seeing now is a situation whereby there will be a kind of sluggish move here, and then the pair will break down. So if that happens, we will be expecting to take profit here on this on this pair. But what are we going to do? We are still going to go down the lower time frame to see what is occurring there. But one thing is clear, that SL is setting up for good, and we will be happy to sell it. Most of us has made a very good profit trading gold to the upward. Therefore, this week we are going to consider making some intelligent sell. If you look here, you discover that a top interbar has formed, or what I would call the bearish pin bar. It has formed, and that has been, looking forward to drag the pair down. The next candle we see here is an indecision candle. The pair, the commodity gold does not know what to do. It wants to go down, it wants to go up. That means there's a battle between the bears and the bulls. This time around, I think the bears are gonna have the upper hand. So we'll be looking for the best time to place our sell trade. Now let me look at what is happening on the next time frame. Let's look at the daily time frame. When you look at daily time frame, you will discover that the story is almost quite similar. You look here, you will see that it is very, very interesting what we see here. So the pair and the daily time frame has already come down. Now it is moving up. So what I think that is going to happen is that this pair is going to move up to make a form of a retesting. So on this region, somewhere here, I will expect it to make another lower low. It's going to break this pattern, make another low, then from around this region it will go up again and come down in this like fashion. So I'm expecting a sell. All right, now let me see what is happening. I like 4 hours time frame a lot, and I use it to place my trade most of the time. Sometimes I use the 1 hour time frame. So what happens is that I use the weekly time frame and the daily time frame to find my direction. Then I will use 4 hours or 1 hour time frame to find a good entry for myself, to find a perfect entry. So the entry is what I'll be looking for now. Let me look at the 4 hour time frame and see. Oh, that's fantastic. That's fantastic. That's very, very nice. So the story is quite similar. What I'll be looking at now is to think of the best place to place my trade and have a very good target. So if you see here, we have an interesting setup. You can see this region, it was a resistance. This region too was a resistance. So now gold has broken this trend line. You see a trend line here, and this trend line has been respected a lot. Look at it here. It's been respected a lot. So what happened is that this pair has bounced on this trend line and move upwards and become resisted and then come down again. What is going to happen is a situation of this nature, just as what you're seeing. So a situation of this nature is what I'm expecting now. So I'm expecting a resistance around this region. There might be a serious resistance around this region, and the pair is already at that region. So what we are looking out for, watching out, is to see the pair massively come down. And if this pair is to come down, what we'll be looking to take our profit on the nearest key support area. So this is our safe take profit level. So if this pair is coming down from here, so we take our profit from here. Mind you, this the 4 hour time frame from this position to here should be around 400 to 450 pips, which is massive enough. So that is what I'm expecting. So what are we going to do as good traders? We position ourselves. If this candle that you are seeing here eventually comes down to become a bearish pin bar, or then that will make a very good sell trade. But nonetheless, I want to see a situation whereby there will be another short candle here, bullish candle. Then the next candle is going to be bearish, followed by another bearish candles all the way down. So that is what I'm expecting. So if that happens, my take profit level should be around this region. So take note of that. There's one thing you need to understand. Once a key support area is broken, upon the pair getting back to that region, that place will now serve as a support. So this trend line has been broken down by strong bearish momentum, and the pair recovers and go down to that same point again. So I'm expecting a resistance there. So it was a support here before. It was a support. Upon it being broken down, it is now going to serve as a resistance. So that is what happens a lot in Forex. So what we do is to take our trade based on what is most likely to happen. So on the best alternative factor. So, and our best bias for this coming week on gold is bearish. So there might be some buy setups here and there. If you are not a scalper, we expect you to ignore it and focus only on sell trade. If we see any buy setup, we are most likely to ignore it and then focus on our sell. So we ignore sell, buy setup, and then go for sell. That is it. I want to remind you that the coming week there are a lot of news that might change the situation of events. There are very strong news events that are coming up, such as the FOMC statement, as well as the non-farm payrolls. So these are key news events, including the ISM reports. So what happens on Wednesday? We have the FOMC statement coming up. Then on Friday we have the non-farm payrolls. Take note of this news. These particular news events are capable of upturning the markets, creating surprises, causing majority of trades to go haywire and fail as expected. Most times news can change whatsoever you are expecting. It can render your analysis irrelevant because of news events. So pay attention to news, and then if you don't know how to trade the news, it will be quite better for you to stay away from the news period, at least 1 hour to the news event or 30 minutes to the news event. You should have stopped trading and then allow the news to take effect. Then about 30 minutes or 1 hour after the news event, you can go back and start trading again. So you have to be very serious and then take nothing for a chance. If you put enough of seriousness, enough of enthusiasm and seriousness into trade, you are most likely to make it. So I wish you good luck on your good trades this coming week. Moving on, this is EURUSD, and this is the weekly chart of the EURUSD. From the chart and what I can see, I'm looking at a downward momentum of the EURUSD. It has been moving in a triangular form up to this point, and it has never really quite broken down, but I'm expecting the pair to to form to the downward time at this moment, at this period of time. It is going to sell, and we are expecting a sell from the EURUSD. If you look at the chart very well, you discover that we've got a very nice sloping trend line. There is a resistance here, and that is where the trend line has formed. Resistance here. So what am I expecting from here? Likely a resistance. You see this channel, this triangular setup? I am thinking that it's going to come down onto the base of this channel. Just this little move from here to here on a weekly chart, it sure give you at least 300 pips of profit. So I want you to be mindful of what you do. We are expecting a sell any moment from now, so I will expect something like this. The retest have broken down. So if this pair is going to be sold, where is likely to be our best take profit level? So it's going to be on this resistance, this very resistance you are seeing here. So if you are patient enough, eventually we are going to see the pair begin to come down, begin to come our way to this point, somewhere here. So I will expect the pair to move down and get it at least to this point. before anything happens. So we are expecting a decent sell from EURUSD. So the pair for the coming week is going to move up and down, but if you are a good trader, on this way down you make profit, on this way up you make profit. So that is what we are seeing. Let's look at the upper time frame. This is a daily time frame of the same EURUSD. So what I'm seeing here is a situation whereby this pair is going to be resisted anytime soon. So what I'm actually seeing is a situation of the pair weakening at this point. You know, at this point that serve as resistance, that serve as resistance. So I'm expecting the pair to also serve a resistance purpose around this region. So they might still move up, at least on this region is where I'm expecting a sell. So let's continue to watch out and then check very well. Anytime we see a very good signal that indicates that one can sell, so don't hesitate to begin to doubt yourself. Simply strike and then you get all the profits that you need. All right, so we are expecting a sell position for EURUSD. From what I'm seeing here, there's resistance here, there's resistance, and most likely there will be resistance here. So that is what I'm seeing. Then coming down to still the lower time frame again is the 4-hour time frame, and we are expecting, you know, a breakdown, sort of breakdown. And when that breakdown happens, we are simply going for the best possible position, which is to take profit at the nearest key support area. So from here is a support area. Taking a profit looks like a small thing, but if you go for this trade, you discover that you can actually make at least from $500 up or $1,000 depending on the size of your trade. All right, moving on. This is GBPUSD, and this is the weekly chart of the GBPUSD. So what am I seeing on GBPUSD? What I see is nothing but sell. So this is the weekly chart, and for the past 2 weeks the pair has given us a red candle, and this red candle is somewhat significant for us. So it shows for the whole past 2 weeks the pair has been going down, and this is where it is now. So now it is here. So what am I expecting? Continuation of the down. So I'm expecting it to come to this point, to fall until it reaches this point where the pair is expected to, you know, to find momentum again to the upside. All right, so that means we still have, you know, position to the upside, but not at this particular point in time. It may take another 1 week extra to 2 weeks before this uptrend here begins to form. But for the current time, we'll make do with sell. So I'm expecting the bearish sign here to still continue until it reaches the nearest key support area, which is this zone. So we'll be looking to pinpoint a very impeccable sell So watch out for the candles that I've shown you that always signal the bearish reversal. So, but on the offing now is bearish. So the bears are having a field play, and we are expected to join them. We don't antagonize them. We fit the flow with the direction. So, and our direction shows that sell is the most likely thing that is going to happen. So even when you look at the daily time frame, this is the daily time frame, by the way, it looks also quite interesting. So now the pair is already at this point. So what I'm expecting to do is to allow this pair attempts to recover. Any attempt to recover will lead to a very good sell. So we are going to take our profit on this on the resistant area here that I'm going to show you. So this is another resistant area. So this is it. This is where we are going to take our profit. Allow the pair to attempt to move up. Thereafter, position for a sell. So any candle that is bearish around this zone, we are going to bank on it and then take our profit here. So Euro, GBPUSD, including EURUSD, they are all bracing up for a sell this coming week, and hopefully we are going to get it all. Alright, moving on. This is AUDUSD, and this is the weekly chart of the AUDUSD. From this weekly chart, the pair has been going down for quite a long time now. This is actually a series of lower lows, and that shows a downward trend. That's a downtrend. So from what I see here, there has also been a reversal again. It attempted to go up and then become reversed at the right place. So a reversal has occurred here. That shows that you continue to see things like this, things of this nature. So this is a series of lower low and lower highs, and that is a downtrend. So I'm expecting something of this nature. So in that case, it means that we are looking for a sell. So any of these regions will make for a good sell. This is what is going to be happening, and the earlier you get it and prepare for it, the better. So I'm expecting a series of lower lows and lower highs, which makes for a downtrend. So at this junction, we will continue to look for our sell on AUDUSD. If we see a buy position, we simply ignore it and continue to look for a sell, because the most predominant position for the coming week as far as this is concerned is going to be on the sell side. So if you get any trade spot on the sell side, just be quite assured that you are going to enjoy your trade, because the pressure is going to be on the bulls, and most times they are going to close their trades in panic, leading to further fall for the bears. So now are we looking for a very good opportunity to sell the market, and as far as we continue to sell, we are expecting to continue to make our profits. So if this being the case, we'll be looking for the best trade. We'll be looking for the best buy position in order to unleash our gain for the week. So in this trade, we are going to be selling, buying at the same time. So if you are selling at the top here and all of this top, you might consider buying at this zone. Whenever the pair moves down and begins to recover, you place your trade, then close it around here. The pair begins to go down again, you buy at the nearest support area and then sell at the nearest resistance area. With this, you're going to make profit both on the sell side and on the buy side. But predominantly, the trade is the bias that we have formed, which we are going to maintain, is the bearish bias. All right. So moving on, if you look at the daily time frame, you see that the pair has actually fallen massively on this point. It has fallen, and the fall is indeed, meaningful. So what happens is that we will continue to look for the sell opportunity. So I'm expecting an attempt for this pair to move into this region. There's something is happening on this particular region. There's resistance, a lot of resistance, and a lot of support area. So if this pair has come down like this, we are expecting a partial recovery up to this point. Then it goes down again. So what happens is that if we see buy signals, we are going to ignore, and when we see sell signals, we are going to capitalize on it. So I'm expecting a continuation of this structure that has been formed: down, up, down. So we buy around this zone, around 0.66120. That is our sell point, and then our take profit point is going to be on the nearest key support area, which is this zone here. So that is it. So our bias is bearish for AUDUSD. Moving on, this is USDCAD. USDCAD has been on a very strong momentum. It has been on a very strong bull run for a long time now. If you look at this chart, you discover that the pair has wanted to break down and always find a way to recover. It has not really broken down. It is locked in what I would call the rectangle. And when it appears in this form, it means that there's going to be a breakout, but this breakout is going to be in any direction. And this any direction can experience this breakout. But right now, the USDCAD is more favored on the bullish side. Here at this point, we thought that it was going to go down when it was at this stage, but it continues to move up, and now it has moved down, move up, move down, moved up. But we are thinking that this bullish momentum is still going to hold. Therefore, it will be difficult for we to predict our bias here. We cannot simply be bullish or bearish on this pair at this moment in time. Therefore, if I am to advise traders, I will simply advise them to leave this pair alone for now. because you can never really establish now the bearishness or the bullishness of this particular pair, but everything is more tilted to the upside. Oh, yeah. So that is what I'm saying. When it was like this, looking at the daily chart, you see it has been many days of of bullish action. Green candle. The only red candle you have seen is just sandwiched in between. So it is to be logical. It is logical for us to think that this pair is gonna come down, but we don't trade Forex based on emotion. You cannot say no, it has moved up so much, therefore it must come down. No, you don't trade by sentiments. You look at the most probable things in the market and established our bias. So if I am to trade this pair, the more correct way is to focus on the upside, and the market right now for USDCAD is having a strong run on the upside. Well, check out this candle. It has been green candle all the way onto this top. Now it is now at the peak of the resistance, and what I'm looking at now is a situation whereby this pair will simply come down a bit and continue the bullish momentum. So if you are not given to trade it to the upside now, I will simply advise you leave the pair alone until you have seen enough discounting. So the pair has moved up consistently for a long time now, and we are expecting it to discount. We are expecting to buy it at a discount. Therefore, once we see a clear-cut, discount, we are not going to place any buy on this trade. But most likely, what we are seeing is a situation whereby it has moved up now. It will attempt to break down, but still gonna recover. So you trade it to the upside. But if you feel that the pair is actually confusing, that you don't know exactly what's happening on the market or what's happening, then I would advise that you leave the pair alone and stay clear of it until it has been discounted, until it has a clear direction. So that is what I see at the moment. Looking at the weekly candle, I might expect the pair to still struggle again with the BS. So there is a sort of struggle between the BS and the bulls, and you will never know the correct direction because they appear that their strength is nearly equal, with the bulls having some sort of upper hand. So if this pair moves down from its current position with about 2 or 3 candles, then it will be safer to now place a buy trade, expecting the bullishness of this pair to still continue to resonate. So that is it. That's what I'm seeing at the moment. Let's be mindful of what we do. All right. So on the daily charts, I'm expecting a little drop, then continuation of the bull run. Looking at the 4 hours chart, the pair has not really fallen down. At this stage, we thought that it was actually going to go down, all the way down, but it recovered and now still present in the same region. So it will be difficult to actually predict its next move because it has continued to hold strong to the upside. So assuming this pair would have done like this, maybe break down to at least any of this region, then it would have been safer to place a buy trade. but now the pair has continued to remain at the exact place it was. So therefore, we might temporarily leave the USDCAD alone until it establishes a comprehensive direction. All right. Moving on, we are now on the USDCHF weekly chart. This is the weekly chart of the USDCHF, and we are continuing our analysis from where we started last time. From what we are seeing on this chart, the pair has been going down, but there is a recovery at this stage. We are expecting the pair to show signs of a serious recovery. So at this time, we are now on a stronger support level. This is the real support that we are seeing here. So we are now on that level of support. So I'm expecting that this support is gonna hold, and we are looking out for a best trade opportunity, and it seems that our best trade opportunity lies to the upside. So if we trade this pair from the point of this strong support level, we might trade it at least to reach the nearest resistance level. I think it appears that will be our best bargain for this pair. So for now, it has been going down all the way, but there's a sign of recovery, and we can never underrate that recovery. It went down from this point all the way to this point, then recovered and went up, come down again, recovered and then went up. Now it has come down to this point. So we are looking at a situation whereby the pair will not be able to break down past this level. If it recovers from this level, then we know that the bulls are really up for it. So at this time, we are expecting these supported levels to hold with this one, so that the pair can at least temporarily move up. So if we place any trade around this zone, we will be taking the profit on the nearest key resistant area. So that is what we're seeing for this pair at this moment. But nonetheless, let's look at what we have on the lower time frame. Then on the daily time, this is what we have. The pair has recovered on this line, on this level. This was the first time it recovers on this level. Then it went up and come again to that level, still recover, and now it's back to that level. It seems that this level is so important for this pair because it has found it difficult to break down below this pair. This is the first attempt here. Still could not break down and continue to move down. He did not. He went up and then got resistance and came down again. Still to that point, he couldn't continue to go down, and now it went up and come back to that point. Still was unable to go down. Rather, what happened is that we saw a bearish momentum. So that is what we saw. We saw a situation whereby the pair recovers with a bullish pin, what I call a bullish pin bar, or a bottoming tail bar. So now there's signs of recovery here, and we are expecting this recovery to move up a bit. All right, so we are expecting that this recovery is real, that it will move up at least, giving us nothing less than 8 to 100 pips of profit to the upside. So we are still waiting for it. We are still waiting for it to give us what we want. So at this point in time, we'll be looking at the best scenario, the best possible scenario. So we are going to place our trade following bullish bias. This is the 4-hourly time frame. So this is the support that we are talking about. Do not underestimate this support area. This support area. So our trade is now at this support head area. Remember when the pair moved up from this point to the topmost top and then came down to this point, it received a massive support and then went up again and is now at that same spot again. So we are expecting it to receive a massive support. So there's going to be a strong battle around this level, and the battle has all just begun. So the formation you are seeing here is a sign, serious sign of indecision. The pair is stuck, not knowing whether it is to go up or to come down. But I want to tell you that the candle formation here is highly indicative of a support that is going to hold. It's highly indicative of a bullish reversal. So I'm expecting this movement here to be corrective in nature, then go. So you are going to expect this pair fight so hard to recover. This is going to be the point of its recovery. It will try to come down, not by much. Then it will try to go up, not by much. So after a period of struggle here, maybe in a day or two, the pair is going to find a very strong momentum that will enable it to be propelled to the upside. So watch out for nice bullish candle formation here. Once you see that, you should be able to place your trade. If you are using moving average, whether it is simple moving average or exponential moving average, just look for a situation whereby the candle, the price or the candle is going to be above those moving average, and then the moving average being under the price. Then that is the best time to continue to follow the trend on the way to the upside. So what I mean is, assuming you have a moving average and that moving average goes like this, this is a moving average, and this price now is here, is above the moving average, and the moving average being below the price, then just know that the setup is now complete for the bulls to continue to progress to the upside. That's exactly what I mean. So for now, it seems the whole dynamics is favored to the bull side because the pair has shown a serious recovery, showing that they will continue to move to the upside. So I've seen a bullish recovery, and our bias still continue to be in favor of the bulls. So that is what we are seeing for the upcoming week, and we believe that the upcoming week is going to be favorable unto us. It's a 1 hour chart, and you can see this pair has recovered already. What I'm just looking at is a sort of continuation to the upside. So it has recovered. It has taken on this very strong resistance area. Here would have been a resistance, because when a pair breaks down a strong support On coming to that support, again that support will becomes a resistance. But that notion, that theory failed here. It could not serve as a strong resistance. Rather, it has recovered appropriately and is now going up. So we are going to place our bet with the bulls. All right, moving on. This is NZD-USD on a weekly chart. This pair has shown a very strong bearish momentum, breaking every necessary barriers, must continue to move on as expected. This is the daily chart. If you look at the daily chart, it's called that the pair has been moving for several days on the bearish side. You will have here nearly about 1, 2, 3, 4, 5, 6 candles on a row without without change. 6 candles on a row, that is massive. That means for 6 days it has been moving without looking back to the downside, and the downside is actually having a very serious pressure to continue to move down. So this is the daily chart. Let's now move to the weekly chart. Weekly chart, you can see for 2 weeks now on a row it has moved down expectedly, breaking this moving average. There's a moving average here. That moving average has been pierced, broken down, followed by another massive bearish candle. This bearish candle has taken out the supportive trend line that is found here. So, and that is a message. It is a message that's letting you know that the bears are very strong at the moment. They are willing and ready to break any barriers that are placed before them. So, what does that mean? In trading, you simply follow with the strongest. You simply align yourself with the strongest at the moment, at the market at the moment. Now the strongest at this point in time is the bears. So we are going to align our notion, our gears with the bears. So this trend line that I have here before me has been broken down by the bears. What I will expect that will happen is a little pullback to the upside and continuation of the bearish momentum, because the bearish momentum at the moment appears to be really quite strong. And we are not going to find, there is no need standing before a falling knife and that will injure you. So you don't fight against the prevailing trend, rather you move with the trend. And the trend next time is the downtrend. So how do I know it's a downtrend? I have here a strong moving average, that is a 200 moving average, and here is a 50 moving average, and the price is quite below these two moving average, indicating that we are in a downward trend. Now let me look at this is daily chart time frame, and both the 250 moving average, they are all well above the price. That means the price are below them. Therefore, if the prices are below them, you expect you expect nothing else than to know that they are on a downtrend. If they weren't on a downtrend, the price would have been at the same position with the moving average, or the price would have been above the moving average, because the pair is in a downtrend. That's why you see the two moving average staying above the price. So what I expect will happen is that the pair will continue its bearish momentum. But at this moment in time, I will expect the pair to make a sort of pullback. Any pullback towards the broken trend line is going to result in a massive fall again. If you see anything of this nature, is a continuation. So we are ready to pounce here. any attempt to recover and move up a bit towards this point will result in a great sell. So as that's what we are expected to do, is to wait until this pair goes up a bit. If that happens, then that is the opportunity to strike. So at the point in time, the bears are having a good time, and we are expected to enjoy the good time with them. So with this candle alone, it has taken out this support zone, the support trend line. If that has happened, I'm expecting the pair to attempt to move up a bit, then down. At that time, this moving average might have come a bit closer, and it becomes a very good time to place our trade. The 200 moving average is quite above the price, therefore urging a move down. So that is a downtrend. So at this point in time, what we play is the waiting game. If we wait enough and everything aligns to our interest, then we're gonna place our trade. So we are expecting that discounting. We are expecting the attempt of the price to recover, at least momentarily or temporarily. That's when we place our trade for the continuation of the downtrend. All right. So every indication for us suggests that the pair is on a serious downtrend. This is the 4 hours time frame. I discovered that for several hours in a row, the pair has been going down. So if this pair can from this moment move at least to the upside, it will be better. We'll be in a better position to trade it to the downside. So let's allow the pair to attempt to recover a bit, then we place a continuation of the downtrend. That is my bias for this week for NZD USD.